Obviously, there was a lot of optimism around Tesla announcing its battery day. What do you make of the sharp rise, though, and then sharp pullback as the stock has been rising over the last couple of weeks?
Yeah, I think just a little bit of a knee-jerk reaction in light of some of these second wave fears. But net, you look at battery day combined with what's going to happen with earnings and profitability in S&P 500. Right now, $2,000 could be on the near-term horizon for the stock, despite some of these COVID storm clouds.
So, Dan, talk to us then about Battery Day. How optimistic are you about this? What does this mean to the larger story of the company?
I think Battery Day is going to be a potential game changer for the story and even for the EV space, because I do believe the million-mile battery gets announced. And I think it's important because this, along with some other technology enhancements in terms of more price parity, and that's something that's going to enable Tesla to actually continue to cut some prices on some of these cars, gives them more flexibility. But net, when you look at it, the moat that they've built from a battery perspective, combined with what we're seeing in the deliveries. And right now in the EV market, it's Tesla's world and everyone else is paying rent. And you're seeing investors, because of the scarcity value for the EV space, continue to push shares higher. And I don't see that slowing down given what we're seeing deliveries, especially out of China.
Meantime, you've got earnings around the corner. How important will profitability be, given that Tesla is very close to joining the S&P 500 and analysts have big expectations?
Yeah, I think if you look at the 90,000 number from a delivery and do some math there, it looks like right now that will be profitability, which is important for the S&P 500. I think what you're also going to see is, institutionally speaking, much more of a buy-in right now from an investor perspective, which is key to the sort of next leg higher in Tesla. I think earnings in general, in terms of guidance, it continues to be a lot of volatility in terms of near term. But I think investors are looking on the other side of the dark valley. How quickly can you see a bounce back to what I believe could be a trajectory to 1 million deliveries in 2022?
And what about the company's push into India? How meaningful do you think that can be as Tesla faces these, challenges that we're all facing around the world?
It's meaningful in relative to all global demand, because right now, with tax credits in the rearview mirror, you're seeing U.S. that's not as much of a growth market for Tesla, which is why China is the linchpin. We think 150,000 units first year at the gates. And then you look at Europe and the Berlin factory, you look at India and some other areas. These are going to be key to the next leg of this growth story in Tesla. I think that's what the stock's starting to bake in, is more investors starting to see forest through the trees in terms of where the EV market could go as they execute.
Meantime, I want to talk about Apple. You've got stores now, more than 90 of them, closing again across the country. Apple telling retail employees to work from home. This is customers are facing longer wait times as they try to order new devices. And we know we're also dependent on our devices right now. What do you make of this?
They're a barometer for overall retail, what we're seeing, not just in the United States, but across Europe and other parts of the world. But the one thing from an investor perspective, retail is only representing 6 to 8% of sales. And even though this is not ideal going into an iPhone 12 product cycle that we believe is going to be a super cycle in the next 12 to 18 months, right now Cook and Cupertino continue to lead by example, safety first in terms of their employees, and that's what they did in Asia as well. These are the smart and necessary strategic moves. Even though the headline looks bad from closing the stores, it doesn't really significantly move the needle in terms of the actual growth story going forward.
Meantime, you've got Tim Cook preparing to testify before the House Antitrust Subcommittee in a couple of weeks in D.C., along with the CEOs of Facebook, Google, and Amazon. How big a risk do you think this House investigation is to Apple and these other enormous tech companies?
Yeah, I think July 27th is a seminal day because investors in the street really need to understand, is this going to be political grandstanding or if there's sharper teeth in terms of going into the antitrust issues? And I think it's important. I do believe that investors are starting to more understand the potential risks. And of course, that would be more Google and Amazon versus maybe an Apple. And I think it also comes down to going into a presidential election, depending on what happens in the Senate as well. This could be a more pronounced risk. Right now, we think it's more fines, but it does feel like a brighter spotlight on these tech giants. And in this COVID-19 environment, the strong have gotten stronger, which is great for the stocks. But in terms of the antitrust momentum, that's definitely not a positive, especially as they testify in the Beltway.